Good morning. It's Thursday, October 5th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's lackluster performance. You have gold up $2, 1837. Silver's up 15 cents, 21.29. Copper's up 1 at 357, and platinum's down 3 at 871. So bond yields had subsided yesterday, and overnight you've got the dollar index facing about a 2-day correction. I believe that new longs coming into the gold and silver market, they're a bit skeptical at this point. You would naturally think that these pullbacks with silver below $21 would ignite a fury of buying at these lower levels. Same thing with the gold market pressing those March lows. You would see a lot of traders come in anticipating a longer term stance on the Fed where they begin to cut rates. I think that they're looking at this as a party. And how I put it in that perspective is that when you go to a party, and especially your wife she'll address it this way, you always want to arrive fashionably late. You want to meet with all the guests. You want to enjoy all the food. You want to socialize as much as possible. But when it starts getting a little bit too late, you're going to have to leave before the police come. And I put that in perspective with the crude oil market. We saw the breakout in crude oil above the 72.50 level. Crude oil futures rallied up well over $90, pushing new contract highs. It was a great party while we were there. However, the house is on fire right now, and we've got some substantial correction. You saw crude oil prices break about 5% 2 days in a row. They're down a bit here today. They are coming back to support as the fire department is putting that fire out. So we'll be looking at crude oil back to the long side. Now, if you look at some of the economic data that's coming out today, you have U.S. trade data, you've got initial claims. We want to see an uptick in initial claims as we saw that payroll data yesterday come in a bit weaker. Now, there are several speakers that are coming out from the Fed later on today, so there will be some volatility, and it's some noise that's in the background at the moment. Now, the trend here on the gold market, similar to the silver market, are both bearish. This is according to the trend following system that I utilize and programmed. The resistance level here is 1842, 1848, and 1854 on gold. So right around, you see anything in those high 1840s to the 1850s, be on the lookout. You're a little bit overweighted. You might want to take it just a touch off here. On the support side, 1824, 1811, and 1798. So we have that dreaded 17 handle. It still strikes again. The trend reversal point on the gold market, it's coming down. Remember, it was over $100 a couple days ago. Now it is only or about $90 away. So it's 1928. So it'll come down, and especially as the gold market consolidates. So look at the 3-day price action. We haven't broken a new low. So that's what's going on that trend reversal point. On the silver market, trend reversal point 23.67, so still way up there, over $2 higher. The 200-day moving average is 24.07. Your resistance levels here, 21.41, 21.66, and 21.90. So quite volatile to the upside. So there's these big pockets here where prices could really run. And I do think that silver is going to be the one, how platinum was kind of the leader before. Now I believe that it's silver is the one that's going to lead us out of the chart. The reason why I say that is the gold silver ratio 86-87. It was in this consolidation range about 83 to 85, so it's on the upper end of the band. I think it overstretches and it breaks to the downside. And one thing to note, a lot of people were talking about silver manipulation, things like that. I think really the problem with silver at the moment right now is that one of the big demand structures that had been leading prices higher, the 25, 26 level recently, has really been some of the green energy technology, some of the green energy initiatives that different various countries have been taking. And as you get rising interest rates, those types of projects tend to be paused because they are intensely capital intensive. They require lower interest rates in order to stimulate that because they're often paid by government subsidies, which remain flat. So as you get those higher yields, the borrowing costs go up and the cost of doing those projects is greater. So I think that that's really the thing with silver. You get the reprieve on the interest rates, you're going to see silver lead us out of this thing. So looking at the outside markets, they're weaker here after yesterday's short covering rally in the NASDAQ. And then the U.S. dollar down 5, now down 7, 106.46. You got crude oil futures down $1.50. I like the March contract trading at $77.63 right now. I think it's a good longer term positioning if you see the inflation start to pick back up again. That'll be the one that is most susceptible to a rally. And then finally, you got 10-year Treasury yield sitting down one at 472. You got any questions? Give me a call. I'm going to launch a technical analysis video here today. I'm going to probably shoot that out around like 2:30, record it at 2, kind of just break down the 4 metals that we're looking at: gold, silver, platinum, and copper. Maybe even throw palladium in the mix as it's about a 6-year low. And just like 2 minutes on each one, flip it out here. The reason why I don't do charts on this one is because of the fact that it is mainly geared as a podcast. So it goes on Apple Podcasts, goes on Spotify, and all over where a lot of people listen to it internationally that don't have that video content feed. So you got any questions? Give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck and good trading.